Hey guys, in this video, I'm gonna cover Fibonacci retracement of discounted price and premium price, right? So what you're currently seeing on the charts is just normal price order flow where we're seeing a bullish, right? Bullish order flow, price in an uptrend pushing to the upside, forming highs and lows. Price goes for a high, goes for a low, goes for a high, goes for a low, goes for a high, goes for a low, then goes for a high, right? So that's proper structure right there that we're seeing. And right, since we trade the swing and pullback pattern setup where we see price obviously swinging to the downside, and then we opt for a pullback right within the swing, and then we jump onto the swing. So the question that most traders ask, when is the best time to jump onto the swing, or when's the best time to know that price has been saturated enough for the pullback, and then we'll continue with the trend, right? So in this video, I'm going to cover that. I'm going to show you guys how to identify that best time, and it's all based on discounted and premium price, right? We're trying to see when price is discounted. We try to understand when price is premium, right? So what do I mean when I say price is premium? So when price is premium, it means that price is expensive. And whenever price is expensive, it's becomes saturated. It becomes overbought, right? They buy too much. And then what happens there? We see price push to the downside. And then if price is discounted, it becomes cheap, right? It becomes oversold. Everybody's selling it, right? Everybody's selling it. What do we see? We see price getting more value by pushing to the upside. So in this video, I'm going to show you guys how to identify the areas of premium and the areas of discount to help you guys know whether price is expensive or is cheap, right? So when we're swinging, right, when we're swinging and pulling back, price does this right here. We see price swing, right, within the swing, right? Remember, so price is swinging, and then we've seen that price here has lost momentum and about to see a pullback. So once price has to pull back, right, within this swing is divided into two parts. The first part being a premium part, and the second part being the discounted part. So this is a quite a bad drawing. So let me try to do it again. So these are the two parts. The first part is premium, and then the second part is discount, right? And then the middle part is equilibrium. It means that price is equal, it's balanced, right? So what do? We tend to look for price to continue when price is become overbought. It's premium, it's expensive. That's when we tend to see price being sold, right? So whenever we're in a downtrend and price pulls back within the swing, we draw a Fibonacci level from point A to point B, and then dividing it into two parts, obviously, with the 50% being the equilibrium, and then up here as a premium, down here as a discount. So we wait for price to come up here into the premium levels. We identify our blocks, right, and our imbalances, our OTE, and all that good stuff within this premium zone, right? Wait for price to respect it, give us a bit of a confirmation setup, and then shoot to the downside, right? So we ought to buy, we ought to sell within these premium levels, and then we ought to buy when price is discounted. So that's an example on a downtrend, right? So in a downtrend, we draw Fibonacci levels from point A to point B, right? Wait for price to pull back within the premium zone, wait for confirmation, then we jump on, right? So let me give an example of an uptrend, right? So if we're in an uptrend, price forms high, goes for a low, pulls back, we definitely identify our swing highs and swing low, and then we identify our Fibonacci equilibrium, our premium, and our discounted. So price pushes to the upside, becomes expensive, and then it starts to lose value. As it is losing value, we ought for it to go below the 50%, right? Becomes discounted, which becomes cheap. Once it becomes cheap, we look for blocks that price might respect and build more confluence. What happens here? We see price respecting this block and then shoots to the upside, right? So it's very important that you identify these levels, guys, these levels of premium and discounted, because price respects them a lot, right? I'm going to show you guys on the live charts, but before I do that, let me try to go through this pattern with you. So as you can see here, guys, we have got price push to the upside, forms the high, leaves the low below here. What happens? Price pulls back, and below this 50% level between this swing high this swing high and the swing low, it goes within this here, goes to our point of interest, identified as POI, right? And then it shoots to the upside. As it shoots to the upside, it forms another high and another low. What happens? Price comes down here within the point of interest in the discounted area and then shoots up. And then we got another point A to point B. Price does what? Comes back below the 50%, into the discounted zone and pushes up. So the reason why we apply these concepts, guys, is to understand what price is doing. So we know that price has been swinging here, and this swing here has caused price to become expensive. The pullback here reduces price's value, right? Price becomes cheap. And once price is cheap, it goes up. When price is expensive, it goes down. Hence, we try to identify the overbought, oversold confluences on top of understanding the price is premium, discounted, or has reached the equilibrium level, right? So as you can see from this example, we've got 1 point swing A to swing B as a swing this thing, and then within the swing, we've got a premium up here, we've got a discount down here, right? So yeah, guys, this is premium, discounted, and equilibrium levels example. So I'm gonna go on the charts right now and show you guys the actual thing, right? Okay, so let me try to clear up these charts. Okay, so perfect. Okay, so in this example, I'm going to show you guys the premium levels and the discounted levels, right? So here, I'll show you guys, this is the first example. We have got price leaving a swing high and a swing low right here, right? What do we want to see? We want to see price pulling back within the swing. And does price do that? Of course it does it, right? So identify obviously my Fibonacci levels from there to here, right? So with the Fibonacci levels, I've got two Fibonacci levels, one to identify my OTEs and other one to identify my premium and discounted levels. So this one's to identify my premium discounted levels. As you can see up here, right, price is premium, down here is discounted. As you can see, price goes above the premium level, above the 50% premium level, and that's what we want to see, right? So identify my blocks within the premium level, which is right here, the imbalance, and I enter off imbalance. I'm sure you guys know that. Right, see price comes there and then just respects this massively and pushes to the downside. So from there, we get another swing point of from swing A to swing B, right? Swing A, swing B. This is the swing right here that we have. We see price pulling back within the swing, and then obviously I will draw my Fibonacci level from there to down here, right? So within this premium level, I'll identify my blocks. So this obviously is going to be the first block I do identify, right? And then I'll get a second block right here, right? So what happens? Price obviously invalidates the first block, right? Takes it out, comes to tap into the second block and pushes to the downside. Yeah, so that's an example of price, guys, going into the 50 level, right, and pushing to the downside. So want to see that. Want to see price pulling back within the 50 level, above the 50. Excuse me for that. Above the 50, right, becoming premium and then shooting to the downside, right? So it's very important, guys, that we wait for price to do it. Don't be patient. If price is below this level right here, don't trade it. Forget about it. Wait for price to move the premium, right? Wait for price to move the premium. If you're going to trade it below the 50%, make sure you reduce your risk, right? Make sure you reduce your risk and understand what you're doing. It's very important that you understand the consequences of your actions, right? So another example, obviously, is price swinging from this level to this level here. We see price tapping above the equilibrium into the imbalance and then shows to the downside, right? This is also a good example. And yeah, let me try to find in the lower time frames, try to find an OTE that's bearish, right? That's bullish, I mean, right? So in this one here, we've got a proper swing to the upside from here to here, right? This is a proper swing to the upside from here to here. I'll put my levels above here, right? I'll put my levels above here, and as you can see, price just goes beyond, right? It goes beyond the equilibrium to tap into this order block right here and just respects its amazingly shoots to the upside, right? So as you can see, we wait for price to enter into the discounted level when we're buying. Price just pushes to the upside, and then another swing is gonna be price swinging from here to, let me see, let me try to go on the lower time so that I can identify the swing highs and lows properly. Okay, perfect. This is the swing low right here, right? So I draw my Fibonacci to from there to all the way up here, right? Up here, and identify my block around this zone right here, right? So let me try to go on 3 minutes and see if there's a block down here. So the reason why I identified that, because I saw some consolidation and there is a block. So as you can see, price comes below, right? We got a couple of blocks down here. We got another block here, right? And then we got the last block down. Yeah, we got a block here, and then we also got a block here. Yeah, so price respects obviously the first block and then shoots to the upside all the way, which is amazing, right? Which is amazing. So as you can see, guys, price does that a lot. You just have to wait for price to go into discounted, right? If we're in a bullish trend. If you're in a bullish trend, wait for price to become cheap and then you buy. If you're in a bearish trend, wait for price to become expensive and then you sell. As simple as that. Make sure you look for an order block, obviously, and build more confluences around that setup, and you should be home and dry, right? So hopefully, guys, this video is helpful, and that's about it. See you in the next video.